So let us continue with the remaining adjustments. So the first adjustment is related to the outstanding expenses. So if there is any outstanding expense, that means an expense which is due, which had to be paid, but could not be paid during the year. It is related to the current year although. In such a case, it will be shown. First, you have to see whether it is shown in adjustment or in trial balance. So if the information is given after trial balance in adjustment, then it will have two impacts, debit and credit. Firstly, it will be shown as an addition to that particular item of expense. So in this question, I have taken an example of rent. Rent appears in profit and loss account debit side. So in profit and loss account debit side, we will write to rent 1,100, add outstanding rent 100. And the total rent for the current year is 1,200. And then in the balance sheet, since outstanding expense is a liability, we will have to show it in the liability side. Here, students, I would like to tell you that if it is outstanding wages, then wages is an item of trading account. Then it will be shown in trading account debit side. When you will write two wages, you will add the outstanding amount in the trading account debit side. So it depends whether the expense is direct expense or indirect expense. In case of direct expense, we will show it in trading account. In case of indirect expense, we will show it in profit and loss account. In both cases, it will be shown as an addition to the item of the expense. And in the balance sheet, it will be only shown as a liability. But if this item outstanding expenses does not appear in the adjustment, it appears in the trial balance itself. That means already the treatment for that item to some extent has been done in the books of accounts. And that is why it reflects in the trial balance. That means already it has been treated as an expense for the current year. So since till now you have not paid it, so what will remain? If the item appears in trial balance, what effect will have to be shown? It will only be shown in the balance sheet on the liability side. No need to show it as an expense. Only one impact if it appears in the trial balance. Next is prepaid expenses. So suppose there is an expense of wages, rupees 500, which is prepaid. Prepaid means we have paid in the current year, but the amount is not related to wages of current year. Some amount we have paid in advance for the next year. For example, for the month of say April, we have paid the wages in the current year. So April belongs to the next year. We paid the amount in March itself. In that case, we will have to remove such expense that is included in our payment, right? In the current year, we will show only the expenses of current year. Whatever we have paid for the next year, for the upcoming year, we will deduct it. So now the treatment will depend on whether the item is appearing as an additional information or whether the item is appearing as an item of trial balance. So let us take the first one, adjustment. If it is an adjustment, then prepaid wages will be shown as a deduction from wages. And since wages is an item of trading account, we will show it in trading account. So in trading account, we will write two wages. Whatever be the amount of wages, suppose the amount of wages was 6,500, and from that we will deduct the wages that have been prepaid that are related to next year. How much? 500, and then after deducting 6,000 will appear on the outer column. And since you have paid in advance, that means till the date of expiry of the period for which the rent has been prepaid, the amount is your asset. Okay, you have prepaid. Next year you are going to get the benefit without any payment, so it is your asset. So prepaid wages 500 rupees will appear as an asset in the balance sheet. However, the treatment will differ if the item, instead of adjustment, if it appears in trial balance. If it appears in trial balance, then without doubt you should remember one thing: there will be only one impact. Okay, and what will be that impact? If it appears in trial balance, that means already it has been shown as an item of expense, and it has been shown as an item of deduction from an item of expense, and so it will be reflected only in the balance sheet asset side, because for the next year it will only have the value of an asset. So that is the treatment of prepaid expenses. Now I'll be continuing with the treatment of other items. The next item is unearned income, or it may be called income received in advance. What is income received in advance? That means we have received in this year, but it is not related to this year. It is related to the next upcoming year. However, because we have received it this year, we should not treat it as an income of this year, and so we should deduct it from the concerned item of income in the current year. Whatever we have received for the next year, we will deduct from the current year's receipts. So if this item of unearned income or income received in advance appears as an item of adjustment, then it will have how many impacts? Two impacts, debit and credit. And the first impact is that being an item of income, it will be deducted from the item of that particular item of income. And so in profit and loss account credit side, because in the example I have wanted to take interest. So if the interest of rupees 100 has been received in advance, then show it as a deduction from interest. So by interest, suppose in the year you have received interest of rupees 1000 less unearned interest, you will write here. And the net amount will go to the outer column. And what about the next impact? The next impact is that being this unearned interest means you have received the income, right, in advance. So next year it is going to be a liability for you. You have to incorporate in the balance sheet as in the liability side, unearned interest. Next year, when the time comes, you are not going to receive that amount. How much amount? You will go show it in balance sheet, only the amount of unearned interest, rupees 100. So this is how it gets reflected if it shows in the books of account as an adjustment. But if it, instead of adjustment, if this item appears in trial balance, what are we going to do? Then we are simply going to remove this impact. We are only going to show the effect in the balance sheet, that is liabilities item. And as I have told you earlier, if there is any item of income, just take care whether it is an item related to trading account or profit and loss account. Okay. Next item is relating to income again, and that is income due but not yet received. So suppose the accrued income or the income due but not received, or we also call it income receivable. Suppose it is interest. Interest of rupees 100 is due but not yet received. That means it is relating to current year. It was due. For some reason, we did not receive it this year. So if we have not received it this year, we will have to show it as an income in the current year. Whether we receive it in next year or whenever we receive it is not the question. The main thing that has to be given importance is that it is related to current year. And so in the current year, in profit and loss account credit side, when you will write by interest 5,000, you will also add the amount of interest that you have not yet received. So let us assume that the interest accrued is rupees 100. So the net amount will be 5,100 for the current year. And in the balance sheet, income due but not received, that means still you are going to receive it. It is a kind of asset for you. And where will you show it? You will show it in asset side as what? Interest accrued or accrued interest. How much? Only the accrued amount. And the accrued amount I have taken it to be 100. Okay. And if this item appears instead of adjustment, if it appears in trial balance, then only one effect. You will have to remove this effect. Only this, it will appear in balance sheet as an item of asset. I hope things are clear. In case of any doubt, please call me or please let me know through a message. I'll be very happy to respond. Next item of adjustment is interest on partners' capital. And I have already discussed these things, even other teachers have discussed with you, that interest on partners' capital is an item of appropriation, not charge against profit. So it will appear, because it is in the adjustment, it will have two impacts. Firstly, it will appear on the debit side of profit and loss appropriation account. You will write to interest on capital. Suppose there are two partners, A and B, and suppose both are getting 1,000 as interest on capital. First, you will show this on the debit side of profit and loss appropriation account. And then in balance sheet, first you will write A's capital operating balance, then you will, this interest on capital, you will add it with the capital. Interest on capital, how much? 1,000. Similarly, you will write B's capital, and there this interest on capital will be shown as an item of addition. Okay, but what happens sometimes, this thing does not appear, this interest on partners capital does not appear in what? In adjustment. It may come as an item of trial balance. Item of trial balance, that means already the treatment has been incorporated in the capital account, just you have to show it as an expense of the current year, and in that case this will be shown in profit and loss appropriation account only. And dear students, just take note, it's not only interest on partners capital, any other amount that is to be paid to the partners, like salary to partner, remuneration to partner, commission to partner, such type of items that are to be added to partners capital will have the same treatment, debit side of profit and loss appropriation account and added to capital in balance sheet. But the thing will change if it is interest on partners drawings, because drawings and interest on drawings, they are deducted from a partner's capital. And so whatever be the drawing, interest on drawings, instead of showing on debit side, where we write on the credit side by interest on drawings, suppose 500. Okay, and in balance sheet it will be, instead of being added to capital, it will be deducted. A's capital, suppose only A has withdrawn money, so A has paid the interest on drawing. So from A's, in A's capital, apart from all the other adjustments, this interest on drawings will be deducted. We will deduct interest on drawings rupees 500, and the net amount will be left outside. So that's it, dear students. In the next video, I'll be discussing a few more adjustments. Okay, thank you.